This is the Sunday Business Page with Jon Delano.
Good morning, I'm Jon Delano. Welcome to another edition of the Sunday Business Page. And our very special guest today is Mark Steber, who is the Chief Tax Officer for Jackson Hewitt, one of our nation's tax preparation services, among other things. Mark, always good to be with you. Thanks for spending time.
Good to be here, John.
So I'm assuming a lot of folks watching this are saying, why is Jon Delano talking to a tax expert in the middle of August? What's that all about? So I want to just begin. First of all, there's still a lot of people who haven't filed their taxes for this year, right?
Millions and millions, and we don't really have an exact number, but we know the number starts out at about 15 million who filed extensions, and they didn't all rush in May. So it's a steady progression, but you can rest assured there's several million that have not filed, and for a lot of different reasons, many which think they're going to owe or do owe based on their prior year. So they're not really motivated, and now we're here talking about next year's taxes. What the hey? So yeah, a lot of people not filed, and a lot of people are looking at the new deadline in less than half a year.
Well, to be clear, the folks who have not filed have until October 15th. Is that right?
That is correct, and that's to get their 2023 tax return done. You know, and not even talking about 2024, but 2023, and that's if they extend it, John. But there's no real good reason to wait till that deadline, because if you owe, you're probably going to have to get that paid sooner or later, and if you do a refund, why would you dare wait till October? So best to know, best to get it done. Time is not your friend if you haven't filed your taxes yet.
So let's talk, Mark, about next year's taxes. I guess that's April 15th, which you can start to file by the end of January usually. Why should we be thinking taxes right now in August?
Well, since it's your largest single financial transaction, that's one reason to always be thinking about it. And taxes are not a tax day event. It's in the front of your mind if you're in any way concerned about paying too much or managing your finances. But the real reason we're talking about it now more than ever before is over the last 2 or 3 years, really since the pandemic, we've seen a couple of manifestations of new types of tax, activity. Basically, lower tax refunds and lots of less people getting refunds and more in the millions now owing taxes, and that's for a variety of reasons. So a lot of people are not getting that big fat refund they were used to, and they have refund shock, as we call it, but many more owing money, and that's a real bad thing when you get to tax day and you don't have much time left, and you not only don't get the refund you're counting on, but you owe money. So what do? You start thinking about it a little earlier, you kind of get an estimate of what it's going to be, and you take some action. And how do you do that? Mid-year tax projection is the easiest way.
And that's what you're recommending that we all do in August of this year to be prepared for next year when we file our 2024 taxes. What is that mid-year review? What should that look like? How do you do it?
Well, it's pretty simple. We don't overcomplicate it. We basically say, take half a year's worth of data up through June 30th. That's why it's a good summer time. You just got that last June 30 pay stub. And if you're self-employed, you probably have a June 30 statement of how much you made. Keep it simple. Take your June 30 stub, year to date, double it, assuming nothing else changes, and you can adjust for that on the back end. But you double half a year's wages, that should be a full year's wages. Take your withholding on that pay stub, half a year, double it. Write that in the margins of last year's tax return. Adjust for other things that you might have, dividends or interest or capital gains. Do a rough projection. Calculate your income, deduct your standard deduction or your itemized, and you can be as rough with that as you want. But the goal is to get a total tax year 2024 estimate of your taxable income. Then either use the current rates, which are on the internet, or even use last year's as a ballpark for this experiment. See what your taxes are, compare that to a withholding estimate, and if you got a big refund, maybe lower your withholding and get more money. But worst case, if your refund is too small, or in fact you owe, now's the time to start having a little more adjusted with your withholding. You fill out that W-4, put a few bucks in each extra week or paycheck. It makes that tax bite a lot less bad on tax day. And the reason why that's important is you still have 4 or 5 months. You could even do this in November, December. You just have a lot less runway. Now, 5 months left. You could put an extra $200 in a month or $200 a paycheck for that matter. Have a much better outcome, either a bigger refund or a lesser balance due owed, but you'll certainly avoid refund shock or disappointment if you do something now and then adjust as it gets through the year.
Mark, we've run out of time, but I'll tell you, it makes a lot of sense. Pay the taxes now rather than really worry about being really not getting anything back next year. So
Or get a bigger refund. If you count on that refund as part of your planning, put an extra $100 in there a month. You'll be a lot better off on tax day with a refund than owing $1,000 or $5,000.
You got that right. Mark Steber with Jackson Hewitt. Thank you, sir, very much for spending time with us today. I do appreciate it.
Good to be here, John. Thanks again.
And thank you for watching this edition of the Sunday Business Page. Have a great Sunday, everybody.